Hi, this is Greg. Welcome to the channel. And on this channel, we talk about business and investment. And in this episode, we're going to talk about how the 2020 election is affecting the stock market. We've talked about a number of different things on this channel and their effect on the stock market, but this time we're going to talk about political risk, and it's coming your way right now. Okay, so if you have been watching this channel at all, you would know that I've been pretty outspoken on my opinion that the market valuations that you're currently seeing in the stock market are largely due and very dependent upon massive Fed action and accommodation, money printing on the one side, and then on the other side, the tremendous government stimulus that's been coming out of Washington. These two factors over time have contributed to completely disassociating the stock market from the underlying economic fundamentals. And as a result of this, despite all the bad news you've been hearing in the news, you see the stock market every day going up and up and up. And I'll put in the description some other videos that I did on this subject. But today we're going to talk about political risk, okay? And the election, Trump versus Biden, and what's going on with the stock market, how is it reacting to it, and how are investors generally viewing this election. Now, I put this whole subject under the category of political risk because it's real. In my mind, it's real. In the two candidates, you have a dramatic difference in the way that they would approach the economy, taxation, and investment. And the interesting thing that I find is that a lot of investors, they don't really follow politics that much. They're really not experts on politics. But a very wealthy man told me many years ago, and I always remembered it, he was very successful in business, and he said to me, if you're in business and you're not involved in politics, you're not really in business. That really made a big impression on me as a young man, and I always remembered it to this day. So the first thing that comes up when you look at this, of course, is the polls. The polls, as you know, have had Biden ahead this entire election. And if you think about it, it kind of reminds you of 2016 when Hillary Clinton was ahead the entire time. Now, one thing that I hope you've all concluded is that polls do not mean anything. Okay, they're not predictive of anything. You should not base investment decisions on polls. You just have to look at the 2016 election or look at Brexit. The polls were uniformly wrong. Anybody who looks at polls and makes investment decisions, just really isn't being too smart in my view. Now, I ran across a very interesting interview with Mr. Wonderful of Shark Tank, Kevin O'Leary. Kevin O'Leary, of course, is a very successful investor, and he's got some interesting opinions about this issue of political risk, and I want you to take a look at this right now, and then I'll come back and make some comments on it. Okay? Take it away.
I think the market knows now, gone through the last election, and certainly the one that I focused on, and with many others, and put huge bets on Brexit, if you recall that. The polls are predictive of nothing. And so if you asked institutional investors or even individual ones, would you make bets or change asset allocations based on polls? They would say no, because it doesn't reflect what the outcome in any way. And I'm not against pollsters or anything, but they've been wrong pretty well all the time. And so if you were trying to hedge your bets on this election based on prediction of polls, it would be useless information. And it is. I understand it's useful for the circus of cable television, and if you watch the various channels at night around these polls, it's fun, it's entertaining, but it's irrelevant to the investor.
But let me ask you, though, you look at the polls may be one thing, people actually making bets predicted and the like may be another thing, or no?
Well, I think there's a 50% chance they're going to be wrong. But if you're an investor, let's say last night I was talking with a sovereign investor in the UAE about are you going to change your weighting to the S&P in any way? Those funds generally index based on what you think is going to happen in the election, and they said it's irrelevant. Who cares? What matters to the investor, Andrew, is policy. And there's a lot of rhetoric, and there's going to be a lot more about Biden versus Trump on policy. So if Trump wins, it's more of the same, and the market understands what you're going to get there. You may not like him, and I get all that stuff, but the policy's been very accommodative for investors, not just domestically, globally. There's so much capital coming in the United States because of a more, accommodative Fed, obviously, and a deregulated environment around energy and everything else. Now, tomorrow morning, or, if Biden wins in early November, he inherits unemployment somewhere between 9 and 11%. His number one mandate is going to get those people back to work. Is he likely to raise taxes significantly on corporations? No. Is he going to start regulating the economy immediately and just put millions of people out of work in the energy sector that's been badly beaten up? No. Is he really going to implement the Green Deal? No. This is what the market's telling you. They don't believe any of that stuff, and they're probably right not to. It's just noise, because his mandate's going to be to get America back to work, just like Trump has to. And the Fed's going to remain at basically, removing price discovery from bonds. You just heard that. And so everything points to just more focus. If every sovereign out there is going to continue to allocate to the S&P, and it won't really matter. It doesn't matter who wins the elections. Nothing's going to change for at least the short to midterm. Yeah. And that's why the market just couldn't give a damn, and why nobody even watches it anymore. It's a great circus. Hey, Kevin, it's very entertaining, Kevin, but irrelevant to investors.
Okay, so in that clip, Mr. Wonderful makes two basic points. Okay, one he makes that I agree with, and one he makes that I don't agree with. The first one, he makes the point that polls are not predictive of anything. Okay, whatever polls measure, they certainly do not predict elections with a high degree of accuracy. And, they certainly are not something that you should base your investment decisions on. Okay, so on that point, I completely agree. But then he goes on to make this point that the market doesn't really care who wins. And, if Trump, wins, he's going to just continue the same policies and the market will like that. And if Biden wins, he's going to be really rational, and he's going to, the whole Democratic Party is going to be rational. And if unemployment is at 8%, he's not going to implement a lot of these far left policies and the Green New Deal, et cetera, et cetera, et cetera. So, he won't be able to implement a lot of the things that they're talking about. So therefore, the stock market doesn't care who wins. So as good as Mr. Wonderful is at investing, obviously he's very successful at that, he isn't equally informed when it comes to politics. In my opinion, the two choices in this election could not be more different. You have Trump, who has implemented many pro-business policies during his tenure. They have lowered taxes, and they've completely lowered regulations and made it far easier to do business, encourage manufacturing, etc., etc., etc. I won't go into everything he's done, but clearly, on balance, even if you don't like him, you have to admit he's been very favorable to business. And I think the stock market, before, I'll call it 𝐦𝐤, came in, the economy was booming, unemployment was record lows, etc., etc. On the other hand, Biden has been very outspoken, saying that he's going to raise taxes, okay? And who knows what that's going to look like. He's saying for people over $400,000 a year, but, who knows what's going to happen with that. More importantly, he's going to raise the capital gains tax and basically double it to 40%. Okay? Now, if you were a stock investor and you thought that Biden was going to win, right, and you believe the polls, wouldn't you be selling stocks right now that you had enormous gains in to avoid capital gains doubling? Don't you think there would be a little bit more selling than there has been in the last 3 weeks? Think about that for a second. In addition, I think the other thing that he's completely underestimating is the ideological strength with which the Democrats approach these different issues. Okay, he's making it sound like they're going to be completely logical, and they're going to make decisions based on where the economy is, and looking at it almost like a Republican would. Unfortunately, that's really not the case, and I think the ideological fervor with which most people in the Democratic Party approach these issues is quite strong. Now, the real risk comes in if, hopefully in the unlikely event that Biden wins and also there's a sweep of Congress and the Democrats control both houses of Congress and the presidency. Now, in that case, you would have the implementation of many of these negative no-growth policies and many of these tax policies and economic policies, like the Green New Deal, etc., 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 that they will at least try, and they will have a very real prospect of successfully implementing a lot of this stuff. So my conclusion is, not that the stock market doesn't care who wins. Okay, I have come to two conclusions. Okay, one is, I think that in general the stock market does not agree with the polls, does not believe the polls. Okay, they saw what happened in 2016. They don't put a lot of stock in the polls. I think, number one, the market is discounting that Trump is going to win again, and therefore the optimism. It's also continually being fueled by all the liquidity and the money printing and the accommodation of the Fed, etc., that we've talked about previously. But I think, number one, they're discounting a Trump win. But number two, even in the case where he does not win, they don't think there will be a sweep of the Senate, so that even if Biden wins, he will not be able to implement really any of his agenda or the far left's agenda, because the Republicans will still control the Senate. So I think the way the market is looking at it is, if Trump wins, there's going to be another stimulus bill, multi-trillion dollars. If Biden wins, there's going to be maybe even a larger stimulus bill of multi-trillion dollars. So in that sense, and the way that the market is focused on that, I agree with Kevin that the market is indifferent to who wins because they're discounting massive continued stimulus in both cases. But I don't agree that on balance they think that their policies will be equivalent in terms of the benefit to either the stock market or to the underlying economy. So I'm going to put some videos in the description below that will be of interest, where I talk about these and other issues related to the stock market and other things, investment opportunities, etc. You can take a look at. And take a look at these two videos that are coming on the screen right now for more information and for, to explore the channel a little bit more. And I am looking forward to you subscribing, and please like the video if you found some value out of it. And I'm looking forward to having you on board for future videos that will be coming your way very soon.